We're going to get a good sense tomorrow on the financial direction of the province as the 2022 budget gets tabled ahead of the election campaign. But this morning, we're bringing in Peter Weltman. He is the province's financial accountability officer, who, of course, plays a key role in keeping watch over budgets and where taxpayer money goes. Peter, we're so glad to have you on the program today. And really, we're in kind of a rare position of getting your report before the budget, and you're projecting we're going to go from deficits into surpluses in the next couple of years. So is that a result of inflation, or is that a result of government policy at this point?
So it's a little bit of both. Actually, we're in an amazing position. The situation is we have terrific revenue growth, tax revenue growth. So we've come out of a recession, a pandemic-induced recession. The other thing that was different with this recession is that the federal and provincial governments provided incredible amounts of financial support to both households and businesses. So as the recession is coming to an end, the pandemic is lifting, people are going out, they have money that they wouldn't have had in a previous recession, they're spending that money. And that's creating tremendous tax revenue growth for the government. Inflation is also playing a part, too, to increase tax revenues.
Speaking of money people perhaps didn't expect to have, Peter, the government also recently refunded license plate stickers to Ontario car or vehicle owners at a cost of about $1.5 billion to the bottom line. That's the dollar cost. But how much of a dent is that actually to, Ontario's overall revenue? Is that like a big deal or kind of a rounding error?
It adds up. It adds up. I mean, in a one-off, it's a rounding error on $175 billion in spend, but it adds up over 5 years. And in the report that we released 2 weeks ago, which provides the baseline, the forecast, in there's a table that gives you a sense as to calculate what the value of these cuts are. So this license sticker cut over a 5-year period is about $6.7 billion. It's not just $1 billion. And secondly, that money has to be borrowed. Even though the economy is strong, we're still borrowing money, just not as much as we were. So that money has to be borrowed, and then there's interest paid on that money as well.
And of course, the cost of paying for those debts is going up as rates go up indeed, Peter. So what does your overall report then tell Ontarians about really the sort of state or strength of our economy? Because, we know the fact we're in an inflationary period now. Inflation rates are going up, interest rates are going up, and we're kind of maneuvering our way through the end of the pandemic. Are we in a good position, strong position? How do you describe it?
We're in a very strong position right now. So we have a couple of years ahead of us where we're going to see terrific revenue growth. We're projecting a surplus, a budget surplus in 5 years' time, about $7 billion. We're projecting the government can balance the books in about a year's time. But at some point in time, that will change. Inflation is a risk. Inflation is at record high right now, or record for a long time. That we don't know where that's going. We're assuming it's going to taper off, but that could get worse. We also know that longer term, in a report we released in February, we look at the long-term situation for Ontario. The population is aging. That means that older people aren't producing as much economically, and that's GDP. They're consuming more health care. Those will add spending pressures down the road. So while we're in a short-term, I would say, windfall position, longer term, things will tighten up again.
Okay, so that's interesting because in the very near term, and I'm talking about 6 weeks from now, we're going to be in a provincial election. June 2nd is the election day. The government's going to release its budget tomorrow. A lot of people see that as a potential policy or platform launch. Do you see the ability to perhaps be able to cut taxes to sort of middle-class Ontarians? Is that something the province could afford to do?
So affordability is an important issue, and it's a complicated issue to solve, and absolutely, because we have an inflation piece in there that's very strong. What we're looking for in the budget, we put this report out 2 weeks ago. It's an independent baseline. It's like, here's where we are right now as a province. It's a neutral baseline. So we're going to look for changes to our forecast. So if we're going to see, for example, tax cuts, then we'll see a surplus situation that'll change. It may not balance, the budget may not balance for quite some time. Now, getting back to tax cuts, if we were to, for example, cut HST by 1%, that will cost $4.3 billion in the first year, and rolling out over 5 years, that $7.1 billion surplus that we're forecasting would disappear. So tax cuts are not without consequences down the road.
Okay. Peter Weltman, we appreciate you crunching the numbers. That is the Financial Accountability Officer down at Queen's Park. Thanks for your time this morning.